to order. And Joyce, if you would you do the roll call, please?
Or whatever you are.
Dave Talley,
Here?
Tammy McDonald. She's here.
Here.
Alyssa Dewan,
Here.
Michael Dixon.
Here.
Mark Bymaster. Here. Kathleen Weigel. Leandre Camel, and I know he said he's absent. He won't be here today.
How you doing? Okay. Then we'll, as we do by tradition, we'll do introductions, and we'll start with Blair down at the end.
Blair Littlejohn from the Office of General Counsel.
Heather Frederick, Chief Financial Officer.
Alyssa Dobbin with the Audit Committee.
Anna Santana, OIG.
Randy Law, Office of the Inspector General.
Dave Talley, Audit.
Teresa Michael, Inspector General.
Carrie High, Counsel for the IG.
Joyce Edison, Executive Assistant.
Michael Dixon, Audit Committee.
Mark Bymaster, Audit Committee.
Annette Pinnock, Director of Accounting.
Brett Friedman, RSM.
Chantel Knowles, RSM.
Okay, then over to this side, we'll have introductions. Please.
Deborah Hardy, CFO.
Darcy Garbisi, Director of Purchasing. Brooke Melinia, P-Card Coordinator.
Leah Evans, Special Department. Christina Daniels, Inspector General.
Okay, and over here.
Aida Smith, Office of Inspector General. Susie Kay, IT Office.
Great. Thank you, and I'm glad to have you all here. Before we get to the approval of the agenda, I want to rearrange it, if it's all right with the group. I want to take item 8, which is the RSM presentation, and put that up right under public comments, because one of the people has got a conflict and has got to leave. So with that rearrangement, I'd accept approval of the revised agenda.
I'll motion to approve.
Is there a second?
I'll second.
All in favor?
Aye.
All opposed? Passed unanimously. Okay, if you want to take a few minutes and look through the October 21st minutes, and after you've had a chance to review that, I'll accept a motion to approve.
I'll make a motion to approve.
Okay, is there a second?
I'll second.
Discussion? All in favor? All opposed? Passed unanimously. I do want to point out that we've got the meeting schedule for next year in your packet, so just keep that in mind and put it on your calendars. Do we have any public comments? Hearing none, we'll move on to Brett Friedman and Chantel to do the fiscal year 22 audit presentation.
Okay, thank you, Mr. Chair and committee members. Again, Brett Friedman on behalf of RSM. You have in your packet in Section 8 our communications to the Audit Committee, and this is presenting the draft results of the financial audit that was completed. First, to start again, this year, since the Auditor General is in, we are only doing the financial audit. They are doing the compliance audit as part of their engagement. I know that'll be issued at a later time. Right now, we're close to finishing the audit. We expect to be able to issue the financials, as planned, which will be probably, I think, the beginning of next week, probably on Monday. I'm expecting. Again, overall, just want to first point out that staff was extremely responsive. We did have, the storm come in and kind of interfere with things a little, the election, things like that, but pretty quick in getting things, no issues or concerns. We also did the examination of compliance with Section 218.415, which is the investment of excess public funds. There were no significant changes to our audit strategy. The new accounting policy that was adopted this year was GASB 87, having to do with leases. That was the major change, which is going on everywhere all throughout. We'll talk a little more about that on the next page. So on the next page, in the district's case, they are both the lessee and lessor to transactions. So they had to account for both sides of things. With regard to that, you will see some new items on the financial statements. At the fund level, you have a lease receivable and a deferred inflow for the lessor transaction. At the government-wide level, in those financials, you will see something referred to as a right-of-use asset, which recognizes the transactions where the district is a lessee. Now, just to recap that, it's something that the standard changed. It's all leases 12 months or longer. It used to be there was a distinction between operating and capital. Now, all leases 12 months or longer get recorded on your financials, and that's what gets recorded as that right-of-use asset. So everything where you're a lessee is now considered a right-of-use asset. Amongst a couple of key things with that, the district did an assessment of completeness to make sure they captured all the leases. We did testing focused around that as well. And also they had to calculate an incremental borrowing rate in cases where there was no rate provided in the lease agreement. In the district's case, that rate for the most part was 3.5%, which is shown there on halfway down the page on the estimate. Again, that seemed reasonable given the nature of the leases. It's driven by the type of lease and the length of the leases, what drives that rate, as far as also the credit quality of the district and rates that are out there in the market for similar entities with similar credit. Going to the next page, a couple other accounting estimates. The other big one is depreciation expense. No changes to that process there. No concerns really. Moving on to the next page. Self-insurance. Now, self-insurance is significant for the district. It is for every government agency. What we do there is we do have our consulting actuary review the actuarial reports. We had no concerns with the assumptions or methods used. They were consistent with what's been done in the past and with what's done in practice. So no concerns or issues, no recommendations. The current insurance liability, that amounts in thousands. So it's $61,317,000, approximately the same as last year, which was $62,296. But again, that is a key estimate for the district as it projects out your future obligations. On the next page, you have your estimate for other post-employment benefits. That one also another significant estimate for the district. Same thing, there's an actuary that helps. Our consulting actuaries review the assumptions and methods used. We had no concerns either with the reasonableness of the assumptions or with the methods applied. Going to the next page, the biggest one you have the least control over, but the biggest liability here is the Florida retirement system. And that one there, actually, there was good news coming, and that's based on the way the market was up until 2022. The last few years, the market was doing well, so the FRS pension plan had some strong investment earnings. So there you'll see on the bottom that the district's net pension liability dropped in half from $1.4 billion down to only $616 million. Again, we have our specialists look at the FRS plan, the HRS plan, actuarial reports, look at the assumptions and how they're calculated. Had no concerns with anything there either. Okay, moving on as far as reporting matters, nothing special really to point out. As we said, the one big thing that's different, and I will tell you, I know I told Joyce she didn't have to put up the monster document that Annette and Nancy and the team put together, but that one is here, and the one big difference you'll see in it is you'll see the lease items that I called out. That's the biggest change this year. Everything else is pretty consistent with prior years. There's required supplementary information, which provides trend data for all your pension and other post-employment benefits. It'll show you where those liabilities are over a 10-year history. Then going on to the required communications, internal control matters. One of the things to point out, we did not have any deficiencies in internal control over financial reporting. Again, our focus is on the financial reporting side. The IG's office looks at operational. When the Auditor General comes in every 3 years, they also do both an operational review and a financial compliance audit. Ours is just focused on financial, so no concerns and no issues, which that should give you comfort again in the information you're getting from management that it's, your control processes are proper and therefore the information you're receiving should be trustworthy. On the next page, as far as audit adjustments, there was one audit adjustment made in the general fund, and that was with regard to the lease receivable, and that was just a presentation item. Again, just part of the new standard, but not indicative of any kind of control problem or deficiency. As far as uncorrected misstatements, now this was a huge undertaking by your team, and for everybody in industry, whether you're in public or private, adding leases was a huge thing, but after all the work, actually the impact on the district was not material. So rather than do a restatement, the district recorded the change in the current year financials. So our obligation is to point out it's immaterial, there's nothing wrong with doing that, but technically that amount would have gone to prior year, so there is a misstatement item that's immaterial and insignificant, but just pointing that out there. Then next page, as far as observations about the audit process, just to report, we had no significant issues discussed with management, no disagreements. Again, the team is great to work with, from Superintendent Burke all the way down through the whole team, super responsive. No consultations with other auditors as far as we're aware, and also, again, no difficult or contentious issues. And with that, I'll open up for any questions. Oh, most importantly, too, I didn't say the words, but on this huge document, the item we will be releasing will be an unmodified opinion on the financials, that they are fairly presented. That's the highest opinion we can provide. Again, we don't speak to the actual financial results, but just how it's properly prepared. Again, unmodified opinion. And with that, any questions?
Any questions of Brett?
I have one question, please. Going back to your comment, this is just for my understanding, and I'm not questioning the amounts, but on the net pension liability from 2021 to 2022, and it's less, it's more than 50%, more than 50, right?
Yes.
And we know that in this period 21, I guess fiscal period 21 to 22 that you're doing, market was off about 40%. How does that relate to your comment with a bigger reduction in the liability? How does that work? I'm not questioning the actuarial people, but globally, how does it work?
Oh, no, great question. And this one, again, the actuarial side works on determining the liability.
Yeah.
Then what you have is you have the net position of the investments. And what happens is, over the years leading up to, the run-up in the market, the investment gains, grew significantly. And what happens is, to not have dramatic changes in the actual funding each year, the actual investment amount gets smoothed out over 5 years. So all those gains from the prior years are being smoothed out right now. The recent losses are going to end up getting put in there going forward. So again, it's a continuous thing where, as the market goes up and down, the performance gets smoothed out over 5 years each time.
So it's a forward-thinking thing.
Yes, yeah.
Is that right?
Yeah, so you'll see,
Thank Thank
some of that pickup again, but it goes forward. It's smoothed out to try and, so that governments don't have a major impact on year to year coming up with your funding for the employer contributions.
Thank you.
Yep.
And I like to compliment Heather and her team with the comments that were just made about your performance. Thank you.
Well, I do want to recognize Annette Pinnock. This is her first year as accounting director, and she really did an outstanding job. And she still had the support of Nancy Samuels as well as the whole team, and really working with RSM. They're very flexible with some of the challenges we face this year, so we appreciate everybody.
Well, Heather, I just want to say I'm proud of you and your whole group for working so hard and making this come to fruition, as Michael just said. Are there any other, or Brett, are there any other questions to come before Brett? Okay, I'll accept a motion to approve the presentation.
Motion to approve?
Is there a
Seconded.
Discussion? All in favor? All opposed? Passed unanimously. Thank you very much. And before we continue, I just want to acknowledge that Tammy McDonald, our vice chair, is back with us, and it's nice to see you. I know it's been a long time, even though we've seen you on the screen. So welcome back.
I'm glad to be back. Thank you.
Okay, we'll go to the IG update. Terry?
All right, we don't have too much of an update. We are moving forward with the audit plan as well as some of our big initiatives, which is the CARES central reporting. That will probably be approved on the 30th this month, the policy. Other than that, we have a new board member that is coming in, Mr. Edwin Ferguson, and he is representing District 7. At some point, we hope to have him come in and say hello to everybody. Other than that, we really don't have much. I just want to thank everybody for everything that you do and hope everybody has a great Thanksgiving. We will be closed next week, except for a very brief meeting on Tuesday to swear in and elect a new vice chair, which is just going to be very limited to a couple of people here. And the official ceremony will be done on the 30th, I think. Is that when the official is?
Yes.
Yes, okay. So, but other than that, I'm very proud of the team. Thank you, everybody, for the Audit Committee, for all your support. Really appreciate it. Now if we can just make it through Christmas.
Okay, thank you. Okay, next we'll go to audit reports, audit of P-card expenditures. Who's going to handle that?
That'll be Anna Santana.
Okay.
Hi, everyone. Good morning. This audit was about purchasing card expenditure for selected departments. The objective of this audit was to determine the extent of compliance with school board policy and purchasing procedures for P-card purchases. I will talk about a little bit the background, the P-card during fiscal years. I'm sorry. In 2003, the school district implemented the P-card program to improve efficiency of high volume, low dollar purchases and reduce administrative costs. From 2019 through 2022, the district incurred a total of $50 million in P-card expenses, and $11.1 million, 22% spent by district departments, and 78% by schools. The table below shows the P-card transactions during fiscal years 2019 through 2022. You will see in the table by schools and by district department for the last 4 years. This audit focuses on P-card purchases made at selected district departments during fiscal year 21 and 22. 11 departments incur more than $150,000 each in P-card transactions for a total $2.6 million, or 59% of all district departments' P-card purchases of $4.4 million. The table below shows the 11 departments and numbers of transactions, number of card holders, and the total amount for the 11 departments selected. The audit produced the following conclusions. This conclusion was about P-card applications and cancellations. All 67 P-card applications were adequately approved and documented. The P-card were timely canceled for all 14 card holders and the 11 departments that were transferred to another work location or determined employment with the district during fiscal year 22. Procedures appear adequate. The second conclusions have 5 exceptions. The first exception was about bank statement. 44% of the 9 P-card monthly bank statement for 3 card holders and the school police department lacked the department head signature and approval, verifying all purchases were approved and legitimate business purpose. The rest of the 10 departments, no exceptions found. The second conclusion, or the second exception in this conclusion was about transaction exceeding the $1,000 daily. 7 of the 11 samples department had 28 transactions totaling $25,953 exceeding the $1,000 daily. They hold but did not have evidence of prior approval for the purchasing department attached to the monthly reconciliation packet. C, inconsistency instructions provided to the P-card holders for documenting travel expenses. Purchasing manual is travel purchases exceed $1,000, must contact district purchasing administrator to temporarily increase the transaction limit. Purchasing card end-of-cycle checklist for card holders and state, in part, backup documentation was attached for all applicable purchase. Purchase over 1,000 other than travel, approval email. This section talk about supporting documents. 4 transactions totaling 1,275 made by the Teaching and Learning Department had no supporting documentation. 5 transactions totaling 1,647 did not have adequate supporting documentation. And the last one is about prior approval. The district established certain purchases with the P card are prohibited unless prior written approval is obtained from the purchasing department, such as services or computer software. Additional computer software must be already approved by the Technology Clearinghouse Committee. Purchases by a school police for vehicles services totaling $295, like a car washes and car repair. And computer software purchased by Teaching and Learning Department totaling $444. Questions?
Okay, questions or comments of Anna? Okay, hearing none, I'll accept the,
I'm thinking I had a question.
you're thinking you do, okay.
When you, in your document here, there's a flow chart. And at the bottom of that flow chart, it seems like the reconciliation process was an exception here. And it took your office to see there was an exception. However, the flow chart provides that an administrator, I don't know how many administrators there are in this program, but the administrator is supposed to sign off on that each month. So what did you do with respect to talking to administrators about this? That's the deficiency, I think, in this report.
If, I can
If I'm looking.
I can respond to that.
Go ahead.
So we do have, the purpose of the purchasing card program is, it's meant to be for small dollar purchases.
Right.
So it's decentralizing what would require a significant amount of work at the purchasing department in order to issue requisitions for each of these items. So we do have a very detailed ELM training program that all purchasing card holders are required to do each year. And part of that training is that the reconciliation has to be signed off each month. You know, so I sign off on all of the P cards that each of my department heads have, and anyone who reports to me. And so it is part of the annual training. We do an audit as part of the purchasing department. We can't look at every single one every month, but we do require that the purchasing card holders submit their P card package along with all of the receipts, which was a prior recommendation from the audit committee that we implemented. And so we audit those monthly packages. And then when there is, like I said, we're not doing 100%, we are sampling them. And when we do find issues, we will actually turn off the purchasing card if we're seeing consistent noncompliance. So we do have controls in place of all of the items that were purchased, even though it wasn't signed off, they were all allowable. It was just that they didn't have the signature of the department head.
So the administrator is the department head? In this flow chart, I'm trying to figure out what goes yes and no. It comes in for a reconciliation, somebody signs off on it, says it's right. And then if no, it goes back to the person to reconcile it. And in this report, there's some exceptions to the reconciliations. And I just wonder where is it? I'm glad the process is happening, that was recommended and picked up, but I think there's another step here that I'm just focused on. I'm just inquiring. It's not a big deal.
Yeah, I think it's just the sign-off was not, that if Darcy, the purchasing director is here as well. I want to make sure that my understanding of this is correct, that it was really just the sign-off of the department head. You can come up to the table.
It says full compliance with P card procedures. And it's either yes or no.
So the department head is actually responsible for the reconciliation and of all the receipts. So every month, I get my P card statement.
Yeah.
I reconcile it. I don't sign off unless there's, you know, if there's an issue, then we go back and address that. So every department head should be doing that.
Okay, that's the administrator.
That's the administrator.
Okay. Okay, thank you.
For instance, I do that too for the IG's office.
Yeah.
Joyce prepares it, I look at it, I double check, make sure everything's on there, then I have to sign off on it. I think it's that signature that was missing.
So, this missing, I don't want to belabor this. There were missing signatures from department heads then,
That's correct.
right?
That's correct.
Okay,
Yes.
yeah. I just want clarity, that's all. Thank you. Thanks.
Okay, are there any other questions or comments?
I just want to emphasize if we can get when we get the follow-up reports on these issues, just to emphasize to see if where we're at, down the road on corrections to these compliance issues.
Definitely, definitely. That's Mr. Bliss, and we will make sure that we include that in the follow-ups for the 6 months.
Okay, any other questions or
And
comments?
that comes back to the committee. 'Cause we
Correct.
put something on the follow-up last month, or last
Yes.
meeting too, right?
Yeah,
So we're
we will.
building, we're building a recovery thing.
Yes.
aren't we? Yeah, that's what I think.
We can have one whole meeting on follow-ups.
Follow-ups, right? Okay. thank you.
Sometimes I forget which issues
Right.
I looked at 6 months prior, and
Right,
this is
we
one I'd like
track
to
all
see.
that, and all that's tracked, and that's, I'd say probably Mr. Bliss's biggest job that he does is the follow-ups on all outstanding, both audits, contract, and investigation recommendations and follow-ups for conclusion.
Thank you.
Okay, any further comments? If not, I'll accept a motion to approve.
I'll make a motion to approve.
I'll second.
Second, discussion? All in favor?
Aye.
All opposed? Passed unanimously. Anna, thank you very much. You did a very nice job. Okay, next is the update of the internal funds audit. Terry, or Randy?
Thank you, Mr. Chair. For the internal funds audit, as of last Friday, we have completed 70 schools out of the 174 schools. We still have 104 schools to go. And then check it today, we have completed a total of 78 now. Because of the 2 hurricanes, and then we are a little bit of behind compared to the last year's schedule, but we are catching it up now. So it's not a big deal. So we should be able to finish it in time too. And then to piggyback on the prior audit reports on PCARD, the non-compliances are very similar when we do the school audits, because doing the school audit, PCARD is part of our scope too. And then whenever there's any non-compliance with these procedures, every year when we go back to do the audit, we will do the follow-up on prior year's finding during every single audit. So that is not a problem too. So we will continue monitoring the corrective actions taken by all the schools. So all those findings are very similar. Nothing unusual, in terms of PCARD transactions. So that's why this PCARD audit was focusing on the district departments. Schools are covered by the internal funds audit every single year.
Makes sense.
Yep.
Thanks for that clarity.
Any questions?
A question on the timing. Is this period for these internal funds audit from up until 6/30/22?
That's correct.
Okay. But I kind of think that these, you kind of would want maybe this to be completed before you're finishing the actual financial reporting audit.
Actually, it's a two-part. Maybe a header can help to explain it, what RSM is doing in terms of the internal funds audit. Internal funds.
I know it's different, but you kind of like I would like to see that this audit completed before you're issuing the financial reporting audit.
I think one of the biggest problems that we have is that during the summer, all of the treasurers, the bookkeepers, and everybody are off.
Okay.
So we can't start that until school starts, and that's a big
Okay.
problem that causes us, pretty much the schools close down.
And then I would like to mention too, that if the auditors were just doing a financial audit, they probably could get it done much quicker, but they do an extensive operational audit as well.
Yeah.
And that's a lot of the procedures that the Audit Committee has had. So, they have worked very hard to get the audits done as soon as possible. And there was a time where they were not getting done until after the following fiscal year. So the fact that they're able to get the amount of work that they get done by the spring is impressive.
Okay, further
To
questions?
add on this, the first fieldwork start date for this year was the last week of August, because the school start, opening in the middle of the August. So we want to, make sure the schools operates, are already operating without interfering with their, school opening before we start going out to do the school audit. So we don't schedule the school audit until, at least a week or two after the school opened.
Any further comments or questions? If not, I'll accept a motion to approve the internal funds audit.
I make a motion that we approve the internal funds audit.
Is there a second?
I can second.
Discussion? All in favor?
Aye.
Aye.
All opposed? Passed unanimously. Okay, we'll move on to item 7, contract review, program management support services, project reconciliations. Terry?
Okay, this will be presented by Edith Smith from our Contract Oversight Unit.
Good morning. So this is a contract review of the Program Management Support Services, focusing on the project reconciliations. The objective of this review is to determine the extent of compliance with the project reconciliation payment provisions. Thank you. Outlined in the contract, including whether the required reconciliations were performed to determine the final amounts due to the program manager, and whether the reconciliations and related payment adjustments were appropriately based on actual costs and calculated correctly. The scope of this review is from June 22nd, 2017 through to January 31st, 2022. Our review included interviewing staff, relevant statutes, rules, procedures, and prior contract reviews done on the program manager. Okay, so just a little background here. The district has a contract with AECOM Technical Services, and what they're going to do is act on behalf of the school board for delivery of the district's capital improvement program. The terms of the contract is from June 22nd, 2017 through to June 21st, 2022. So it is a 5-year contract with 1-year additional renewals. And at this point, they have renewed for an additional year through to 2023. Okay, so this is just a quick overview. The OIG has identified 127 purchase orders, which is equivalent to 127 individual projects for a total of $16,251,316 million. Okay, so diagram 1 just shows you what the program manager does. The district is the owner. The program manager is the one that schedules, monitors, and manages the capital improvement. Diagram 2 shows you the steps in the process. So I focused on the closure of some of the actual projects. Here is a sample of 4 of the projects, and there were 26 in total that were scheduled to be reconciled because they were complete. And when I say complete projects, I mean the capital project is already complete. Some of them have already gone to the board for approval. The reconciliation here is between the district and the program manager specifically. So I honed in on just 4 projects, 4 that have been previously reviewed in prior contract reviews. And we discovered that 4 of the projects had a overpayment of $150,370. So that was an estimate due to the district. The total for the 26 projects was $287,260.
Of which 150 is overbilled?
Can you repeat that?
Sorry? Of the 287, 150?
370.
Yeah, yeah. Is that, could you repeat what that 150 is again, please?
Okay, so the sample for this review is for 4 projects.
Right, got that.
And the 150 is the total of the 4 projects. So basically,
Oh.
it's like 44% of the overpayment was only for these 4 projects. Verde being a very large project that consisted of 2 campuses.
Yeah. But Mike, I guess my question is, I don't care about the percentage of 44%ers. Of the total contract, was it overbilled 150,000? The 4
Yes.
contracts? Is that what we're
Yes.
saying?
Yes.
Got it. Okay, thank you, thank you.
Well, if I could provide some clarification
Yeah,
now,
please.
is because the way that we pay AECom is based on the budget. The budget for the project includes a contingency. So the way that the way that the contract is set up right now, we're always going to overpay them based on, we're paying on the project, not actual expenses. And so that's why it's important to do the project reconciliation. These are the first set of projects that are being completed. All the money has been returned, and we are now up to date where all the projects that have
Okay.
been completed
Okay.
have been reconciled, and we're working with AECom because they agree, they don't want us to overpay them, but we're going to have to actually change the contract language so that we're not paying them a percentage based on the budget and with an included contingency amount.
So this examination that goes back to 2017 is the beginning of the contract with this group?
Yes.
Correct, and yeah, but
Here
these
it is, so-
projects were just recently completed.
Recently
So I have a question. You said that the payments are based on the budget and not a contract. Do we have contract amounts as well, or it's only
No,
budgetary?
The contract is based on what we pay and reimburse and pay AECom for their services of managing and oversight of these projects is based on the budget of the project. And so, because it's a percentage. And so since the budget is a budget, it's an estimate of what the costs are going to be, and we always include a contingency because especially now you can see how important that is with having the increase of prices and costs of materials. So now we're going to adjust that so that we're going to be paying them 80% of that, of the budget, not based on a percentage of the total budget.
'Cause the
And that will
budget,
minimize the amount of the overpayment.
so the budget includes their fee?
The budget includes their fee, yes,
Got it.
and it includes also a contingency of unknowns, because we always
Right.
want to make sure that we have
Combination
enough
of
to.
both, right.
Right, and so the way that it was built, it wasn't until we went through these first set of reconciliations that, and we identified it internally, that we were overpaying them, but we have to work through the language, changes in the contract language.
Sure.
And AECom was voluntarily agreeing that we would pay them based on 80% going forward as we work through those changes.
So how many contracts are included in this? 100, what was the beginning number? How many projects were included since 17 that they've been managed?
26. It was
26.
26.
And these are 4.
Yes.
The other 22, were they looked at?
Yes, we are completed and up to date with.
And they're
with
good?
all-
They're good as far as you're,
Well,
they're all
no,
good?
there were some overpayments in there, but we
Okay.
have,
And you
we've
collected the money?
received reimbursement of
Okay.
all of those
All right,
overpayments.
that's fine, good. Thank you. Sorry to interrupt, ma'am. Sorry.
No, that's fine. Thank you, Heather, for getting ahead of us, because this is where we're going next. Okay, so just to
Bottom line.
just to confirm that the
Sorry.
projects, as Heather said, are estimates, and the fee for AECom is 2.2% of the estimate. So it was designed to have equal monthly payments, which is why it went ahead. Okay, so the conclusions that we have discovered is that the reconciliations are not completed timely. So bullet 1, there were 12 projects. 12 of the 26 were concluded more than a year ago. So this is why we stepped in and said, okay, we want to see some of these reconciled more timely. Bullet 2 is written project reconciliation procedures at the they were not written until we started this review. So AECom and the district got together and made sure that they started with putting the procedures in place. And bullet number 3 is newly drafted procedures. Now that they created their procedures, they are inconsistent with the contract language. So this went out to management, and they responded that they concur, and they will work on the revising the contract language, some of the contract language, and also 26 projects have been reconciled to date, And anything else that needed to be done, they will have that done by January 2023, so we will follow up at that time. Do you have any additional questions?
I have one question. With the contingency, if they do use the contingency, is that amount looked at to make sure it's qualifies to be part of the project?
Yes, and I can let Ms. Evans speak. They have very detailed procedures when they're using those contingency funds.
The capital budget has a contingency, but within each project, there's a contingency. So we're managing within that project budget.
Yeah.
So that money can't be used for anything else without transferring from one project to another. That's a change to the capital plan. We try not to do that.
Yeah.
It does happen on rare occasions, but
Yeah.
it's well documented when it does happen. So we make sure we contain it. Each one is a separate bucket. They have different funding strips. Some projects are funded with debt, some are funded with sales tax, so we can't mix and match those things.
Yep.
So we have very tight controls over that.
Okay. Thank you.
So is the contingency for change orders, basically?
Yeah, when you dig into the construction projects, and our Construction Oversight Review Committee sees this as well, there is actually a contingency within the construction contract, then there's a contingency for the overall project. So typically that's used for change orders, or if we see, and we are seeing an escalation in the cost of furniture, and if we're building a new school, we're buying new furniture. So that contingency for the project can be used for change orders, for furniture, for other things that come up during the construction project.
And how do you how do you monitor and oversee that contingency? I'm asking that question because a lot of times in the construction industry, people or companies will bid so that they can ensure they get the job, and then they come back with quite a few change orders, and then it really escalates the actual cost. And I'm just wondering what the process is to ensure that's not
I
happening.
can answer on the finance side, and then Mr. Sanchez or Mr. Dolan's online may want to chime in. But from the financial side, we break down the projects into each different type of activity. It's actually a field in PeopleSoft, so we'll have one for the architect, for the construction contractor, for change orders, for furniture, for testing. Each of those, and contingency, is a separate activity code. Money can't be transferred between those unless it comes back to my office in the Treasury Department. So the construction department doesn't have the authority to move money within the project. They've got to provide documentation to us. We validate that it's correct, it's in compliance with cost per student station, before we'll move that money. And to move money out of a project is another step. If it's small within maintenance projects, we usually send a note to the chief that oversees that and to the chief financial officer so they're aware that we're changing the capital plan. But within a construction project, it's very rare that we do that. That's typically at the very end of a project when we're taking money out of the project to close it out. But we're monitoring line by line of the project budgets throughout. I don't know if Mr. Sanchez or Mr. Dolan would like to chime in on what happens within the contract.
Yeah, well, I'm sure Mr. Dolan will correct me if I say anything that's wrong, but we do have tight measures or tight controls on our contingency within the project budgets. We have several people that review them. So we use construction management at risk, which is different than hard bidding GC contracts. And one of the reasons we do that is because the construction manager is charged with looking out for the money just like we are. They get a fee based upon the negotiated GMP. They don't make additional money after or for every single change order. There's a contract clause that limits that. So they are looking out for our money, just maybe not as well as we are, but they're charged with doing that. And if they don't do it, they don't get the next project really. So when a subcontractor brings a proposed change order to us, it's first reviewed by the construction manager to make sure it makes sense. It's reviewed by the architect to verify that it wasn't in the drawings, it wasn't something that was anticipated. And then once it gets passed then it's reviewed by both the project manager and AECOM. We have a project controls group that reviews every change order to make sure that it makes sense, that the amount is a reasonable amount. And if it gets past all those hurdles, then it has to be approved by Dave and his team. And there's a policy that's in place, a board policy, that limits how much staff can approve. And if it exceeds that amount, it has to go to the superintendent. And if it exceeds his authority, it has to go to the board. So there are a number of controls on our spending of contingency, so I feel pretty good. If you look at some of our board items, when we close out projects, you'll see consistently we give back money at the end of the project because we don't spend the entire contingency, and that's the point. It's not to spend it, it's to have it there in case we need it.
I'd actually add, even if it's delegated to staff, it's within their authority, that still goes back to the board to be approved as a ratification. It's always.
Yeah, I was going to say, it also, we also have that construction oversight committee, and we meet monthly, and we do, even on the ones that are delegated to staff, they have to be validated by our oversight committee monthly, and they're really strict on it. But they're also focusing on being in compliance with our policies on change orders and contingency use. They're very, very prescriptive, very defined as to what can be used, what's the effort that needs to be shown to justify it. So.
Sounds like we have great control. Thank you.
I would just like to, so these are payments to AECom for project management, and this has nothing to do with paying the actual contractor for doing the job.
That's
And-
correct.
Okay, so there's contingencies within the job if they have to do more work or something to project management, and sometimes if the contingency isn't used, then it gets refunded back to the school board.
That's correct.
Correct, but AECom is not getting this money. AECom is being paid based on a percentage of the total project. And so that's why, like Mr. Sanchez said, we don't ever intend to spend the whole amount of the project. So they were being paid, the way the contract was built, they would be overpaid every single time.
Yep.
And so that's why once we identified that, through the audit, we immediately started working with AECom on ways to minimize those overpayments, because they don't want to be overpaid either.
Yeah.
You know.
I have a follow-up on that. With this 26 contracts, what's the dollar value that we're talking about here of the project, of the capital? But how much money are we talking about? These are refunds for the overpayment of fees. I got it.
Right, and these are smaller projects.
These are smaller projects.
These are
So what is-
smaller projects.
What is this capital amount that's being expended? Because it's all cash going out for these things with your contingencies and your estimated fees. So there's a lot of funds moving on this. Can you provide an estimate on that? Is it and it makes it more complex because this is like 5 years or something.
That was in the backup. It's not included in the audit, though, and I don't have that handy with me. I'm sorry, but
That's all right.
I know that was in the backup because we actually calculated
Yes,
the
we can
total
bring that
budget.
number, we can bring that number.
Is it $100 million? Is it $10 million? Or is it $250 million? What are we talking about here?
Is that on page 2 where it's $16 million? 16,251,315.
Well, the
Is
six-
that it? Is that the
16
population?
million is the total of all 127 contracts.
So that's
what he's
the
asking.
purchase order, that's the amount
That's
of
the
the
purchase
purchase orders to
orders. That's the purchase
AECom.
order.
The total project, Verdi alone was over 30 mil, was closer to 40
Yeah, it's got to be a
million.
big number. That's why I'm asking. I
It
mean,
it is a significant dollar amount, and we do have that. It's just none of us brought that with
Okay,
us
it's
to the
fine.
meeting.
Work
I'm looking at
papers.
Ida,
No,
we have it.
okay. Because we're only talking about the refunds of the fees.
Right, because we focused on the reconciliation of
Right,
it.
got
But we
it.
can get that number to you if you
And the
like.
just to give you an idea of the scope, the amount they owed us back was offset by 1 month's worth of bills of what we're paying them. It was done before we got to June 30th. We wanted it cleared up before the end of the fiscal year. So it wasn't, they gave us credits that were offset by current bills.
Okay, so this contract that you extended for 1 year till next year, was this done to help you determine whether or not you want to continue with them or another vendor? Just, can I ask that question?
That would go to Mr.
Yeah,
no,
I mean, they're doing a fine job. I mean, we're getting our projects built on time, within budget, so we had no reason not to extend their contract for another year.
So this review was not conducted in anticipation of renewing the
It's just
contract?
procedural.
Okay, but it hasn't been done yet till now?
Correct. It wasn't to determine, it was just to make sure that the full cycle is being done. We know that the projects are being scheduled, that they're being monitored, but were they being reconciled?
Okay, any
Thank
further?
you. Thank you very much.
And so on a
Other questions
go-forward
or
basis,
comments?
is it, I'm sorry,
Go ahead.
is it going to be done every year, every 4 years, or 5 years, or consistent with what's been done now here? I think it's, 4 or 5 years?
Do you mean the actual review?
Yes.
We could talk about that.
We will as part of the audit work plan, I think we'll take a look at it, and we'll see if we're seeing any issues. This probably will be something that we will follow up again, because they've changed their contract language and also added some policy and procedures. So this will probably be something that we will have on again for the following year, just to make sure that everything is working smoothly, anything new comes up.
I have one more question for you. It's a cash flow issue. These contracts, what I'm hearing, you used 1 month of it was a refund that paid for the next month's fee. So you recovered all. How much was that?
The 1 month?
Yeah.
They're getting paid on a monthly basis. I think it's $700,000 or $800,000. They're managing a lot of projects. This is
Yeah.
all the sales
Yeah,
tax?
I would think it's a big number. We're
is a
not
big
hitting big
number.
numbers here. We're hitting these individual fees on contracts. I was just, globally, I'm trying to understand the process, that's all.
Right.
Thank you, that's good enough.
Well, it's also good for the committee to know, these projects are overseen by the Construction Oversight Review Committee. If it's a sales tax project, it goes through this Independent Sales Tax Oversight Review Committee. So there's a lot of people looking at different parts of the projects. Cork doesn't usually get into the weeds of what you're looking at today, neither would ISOC, but overall, there's a lot of people reviewing the projects right now, and we welcome that oversight, certainly.
Right, thank you, thank you.
Okay, are there any further comments or questions? If not, I'll accept a motion to approve.
I make a motion that we approve the report.
Motion on the floor. Is there a second?
Second.
You need a second.
Second.
Thank you. Any discussion? All in favor? All opposed? Passed unanimously. Ada, thank you very much. You did a very nice job.
Thank you.
Okay, the investigative report on Dwyer High School fundraising was sent to you by email on the 7th of November by Joyce. Are there any general comments?
I have to apologize, I didn't read that report that was sent to me. I have to apologize, I have no comments. But could you give me a quick overview in 30 seconds or less?
I don't have it with me.
Yeah, I'm trying to think of. All right, 33 years of investigations are all swirling in my head right now. Do you remember anything? I believe
I
that.
need Oscar right now.
This gentleman has an idea?
Well, okay, here's the Director of Investigations, who has a better memory and younger than me.
That particular investigation, we've had a couple in Dwyer, but that one there was some found money in some lockers, and we were able to determine where that money came from and issue some recommendations to OPS. I'm hesitant to go any further because we don't really discuss investigations during Audit Committee, but that's the gist of it.
Okay, thank you. Okay, I'll have to look at my email.
Any other comments? I'll mention to you, the district is closed all of next week, so I want to wish you employees in particular, enjoy your week off, and I want to wish everyone a happy Thanksgiving. Our next scheduled meeting is Friday, December 16th, and if there's no further business, I'll entertain a motion to adjourn.
Motion to adjourn.
Second?
Second.
Second.